and we'll just dive in. So current status of the Paycheck Protection loans is, as of the end of June, there was $521 billion, and which equates to about 4.8 million loans nationwide. What we have seen over the past couple of weeks is that average loan size has come down each week. So you're looking at 107,000 as the average loan. That really means that this program really got to the smaller businesses that needed it, which, as we all know, at the front of this program, that was something that was highlighted, that only big businesses were getting it. And then you can also see the stats for Illinois. There are still funds remaining, and at the 11th hour on June 30th, the Congress passed an extension of the application date. So there is still time. If you on the call or you know anybody still has not received PPP funds, there is still time to apply. So let's go over the actual forgiveness process. So from the date that you received your funds, you now have either an 8-week covered period or a 24-week covered period. And then you also, beyond that, have 10 months from that 24-week covered period to actually submit your application. So this is not something that you need to do as soon as you hit your 8 or 24-week period. In fact, a lot of us are encouraging you as a business to wait the 24 weeks, and then you can actually do your 8-week calculation or your 24-week calculation and figure out which one is more beneficial for you. And then you could, even if you're sitting at your 24 weeks, you could actually submit for an 8-week covered period. The reason, and we'll go into it as why a little bit later, and some decision making that you can do. But really, because this is an ever-changing program, and the Flexibility Act gave a lot of lenience to borrowers, we're thinking that that lenience is going to continue to come as the SBA starts looking at the forgiveness applications. So we're saying, you know what, borrower, hold off a bit and see what additional leeway you have, and it could work to your benefit. So really the message here is, I understand some of you want to get this over with, but if you wait, it could be easier in the future. So what is going to happen is you're going to apply a forgiveness application with the lender that you received your PPP loan. So you can't jump banks. That lender will have, each lender will have their own way of intaking that application. I know at First Bank of Highland Park, we are setting up an online portal where you will fill in the information. A lot of it is already pre-populated, and then you will upload your supporting documentation. Once you've submitted the application, that lender will review your application. We're, as a lender, really just verifying the information that you put into the application and comparing it to your supporting documents. So if you say that you spent $200,000 on payroll costs, we're going to look for that supporting information so it matches up. We as a lender have 60 days to review your application. Then once we approve it, and of course there could be some back and forth if we're missing something or if we do see an error. But once we have decided that your application and your loan is fully forgivable, we then send it to the SBA. Here's something funny. I find it funny. The SBA still has not told us where to send these forgiveness applications. So we're all sitting in limbo right now. And we're waiting to see what they're going to do. Now, once they have released that information and we submit a forgiveness application, they then have 90 days to review that application. They gave themselves an extra month from the banks. And then pay the banks back depending on their approval. So really it is a two-step approval, once via the financial institution that you're working with. And then again, we have to wait for the SBA. So really need to be patient with this process. Sally, Arlene, anything to add on the process side?
Not on the process side, but if I understand correctly, what the Flexibility Act added with the 24-week period is you choose 8 or 24, but if you feel you've met the allowable costs sooner than 24 weeks and you want to apply before the 24 weeks is up, you can do that as well. And that would help you, that if you're concerned about FTE haircuts, and we'll talk about that a little later on.
Yeah.
You
So
might
the only thing I would
apply sooner.
Right. So the only thing, that's absolutely true. The only thing I would caution on that is if you do apply before your 24-week period is over, you are signing an attestation that you are going to retain your FTE. So, and again, who knows if you apply and it's forgiven and then God forbid you have to lay off someone, what the SBA police is going to come and do to you. So again, a lot of unknowns, but yes, that is correct. You can apply at, let's say, 18 weeks if you have, met all the criteria, but just know that you are signing a legal document attesting to the fact that you will not release any of your FTEs or reduce wages.
Right, and there's even a lack of clarity with that. I know that they said you had to hold on to your wages till the end. The FTE, there was less clarity that had to be through the end of the 24 weeks. So as Courtney's saying, there's a lot of lack of clarity. The longer you can hold on, the better you are, because the more costs you have, you don't have to limit your application to what your loan proceeds were. So if you had, a loan of 75,000, but you've had payroll of 100 and rent of another 20, you would want to put all that down, even though it exceeded the loan amount. You can't get more than the loan amount approved, but it's okay to keep accumulating costs.
Right. Sally, anything to add?
Oh, I think you both covered it.
Okay, sounds good. So as Arlene said, we had the Flexibility Act approved, and this went into effect on June 5th. So what this changed was, and we've already discussed a lot of, you've got an 8-week period or a 24-week covered period you can choose from. Also, the loans after June 5th that were made now have a loan term of 5 years as opposed to the original 2 years. The loans that were already in place for 2 years, you have to mutually agree with your lender to extend that to a 5-year period. So at First Bank, it'll probably be few and far between, but that is an option for the borrowers that were approved before June 5th. Also, what they did is they reduced the amount that you need to spend on payroll. So it was at 75%, and they reduced that to 60%. Something I want to remind everybody is that it can be over that 60%. So I always get questioned, well, I have plenty of payroll to cover 100%. Is that okay? Yes, that is totally fine. In fact, it helps with more of a slam dunk on the forgiven side, because then you're not worried that you didn't spend enough on payroll. And then the payroll tax is now deferred to the end of the year, correct, ladies?
Correct.
Perfect. I always like to, confer with my tax experts on those type of things.
No, and that's really clients who weren't taking advantage of the payroll tax deferral before. And those who don't know what that is that employers can defer the Social Security, the 6.2% part of their employer tax liability, and not pay that with their tax payments every pay period, but instead defer that, and then they can only have to pay half by December 31 of 2021 and the other half by December 31 of 2022. So it doesn't make the liability go away. It just kicks the can down for a year or two.
Yeah. Cash management. So what didn't change when the Flexibility Act passed was that application deadline. However, as we all know, they have now extended it after the act passed. The employee retention credit is still not eligible for concurrent credit. Loan forgiveness is based on that FTE and wage reduction. And then expenses paid with your PPP are not tax deductible. I have heard that there's a lot of talk about getting that changed, but I haven't seen anything move in Congress in either the House or Senate for this. So I think it's here to stay, but to be determined.
Yeah, we're all keeping our fingers crossed they fix
Yeah.
that.
So what are the Safe Harbor Acts that they implemented with the Flexibility Act? So 2 were already in place. They basically said if you had to lay off or reduce wages, if you re-implemented your headcount or the wages that you had to reduce by to the level that you had on February 15th, then you're safe. Then you're okay for forgiveness. Some of the things that they kind of clarified, because it came up, and I know at the first hour of this, I actually got a call from one of my clients and they said, I have to lay off someone because they legitimately stole from me. Is that going to affect my head count? At first it was kind of gray, we didn't know, but the Flexibility Act really clarified that. So if you did have to lay anybody off for cause, if an employee went and left and you needed to let them go and they went on the unemployment, which is pretty lucrative for some folks, and they said, and you said, I've got money now, I can hire you back. And employees said, you know, I'd rather just stay on unemployment. This is really working for me. As long as you have that documented and you have filed that, then you don't have to worry about that one individual. Also, we've had some cases where employees say, you know, I want to stay at home. I want to leave. I'm just too scared to come into work. Or maybe there's a family situation. I have an 8-year-old son at home. So, you know, there's plenty of people with families that have said, you know what, I need to reduce my hours because I have to stay home and become a 2nd grade teacher. So if you have clearly documented those will not count against you. And again, the key is documentation.
Right. I'm just going to interject and included in that voluntary departures if somebody retires.
Yep.
That also counts. And if anyone has any questions on what type of documentation, just shoot it in the questions and we can get back to you at the end so we can keep moving.
Yeah. So generally, I'll go over kind of generally what happens with this forgiveness process. And I always like to remind folks about the disaster loans, the economic impact disaster loans. And because it seems to be forgotten a lot, if a company received the grant portion of the EIDL loans, it automatically comes off the top for forgiveness. So the maximum piece on that is $10,000. So if a company received $10,000 for this grant and they received $100,000 in PPP, only $90,000 is forgiven. So just a reminder if you did get the grant. Now moving on to that, what else is going to reduce your forgiveness? We kind of touched on some of these already. If you don't use at least 60% of your cost on payroll, if you have reduced your headcount or reduced wages over 25% for an individual. So what you're going to do is you're going to provide all of the supporting documentation if you have done one of these things and calculate it within the application. And I actually have examples of the application pulled up. Any amount that is not forgiven then turns into a 2 or 5 year loan at 1%. That is a really good loan and very lucrative for some businesses. Obviously some businesses, you know, just adding an extra payment to that, to their cash flow at this point might be very hard. But for some, a loan like this could be a lifesaver. So what's included in payroll costs? Compensation for employees, not to exceed the $46,000 and change. What does that include? Salary, wages, commissions, tips, any sort of PTO that you normally pay. And then if you, you know, had someone retire or you needed to dismiss them and you paid them a severance, that can be included as well. They're also including anything, hazard pay is what they're calling it. So if you have employees coming in the office and you're going to pay them a little extra because you feel they're putting themselves at risk, that is included as well. So any sort of bonuses for that would be included. You also get to include your healthcare contributions, any sort of retirement plans that you normally pay, and then your state and local taxes.
One thing I just want to interject, the maximum compensation of the 46,154 is if you take it through the whole 24-week covered period.
Right.
So if you take the 8-week period, you know, it's basically $1,923 a week is the max per employee.
Right.
Hello, ladies, real quickly. We have some questions. Would you like to keep them till the end, or may we interject?
I think we should keep them to the end.
Yeah,
So that we can
because we might cover it.
right.
Sounds good.
Go along.
Proceed then.
Thanks, Michael.
Yeah.
So through this process, the SBA created what's called an owner employee. And that is your independent contractor, your sole proprietor, your pretty much that one-man shop. So, and they develop some rules around them specifically because, and I believe in the actual interim guidance, it said something to the fact that they didn't want them to get a windfall from this. So what they did is they put a stipulation on capping the amount that they can have forgiven. So for the 24-week covered period, it's capped at $20,833. Now, if you are an independent contractor and received a loan and normally make over $100,000 a year, you will recognize this number. This number is basically your loan amount. So what they're saying is no independent contractor or individual can make more than $100,000 annually based on this program. So that's the cap. For the 8-week cap, it's $15,385. So basically what we're saying is if you're an independent contractor and you usually make more than $100,000 a year, you will most likely default to the 24-week covered period. Because if you choose the 8-week covered period, you're going to have those non-payroll expenses to make up the difference. So if you have rent or lease or utilities that you can add in and you want to take the 8-week period, but honestly, it's probably just more clear cut for you to take the 24-week option and pay yourself and just have 100% compensation. You guys agree with me on that?
Yes.
So if you do need to take, and if you absolutely want to have the 8-week period and you need to utilize non-compensation expenses, it has to be something that you had filed on your Schedule C in 2019. Here's a list of those non-payroll costs that I've been talking about. So mortgage interest payments, you cannot include mortgage principal payments, rents or leases, and they must have been in place prior to that February 15th date. So you can't just automatically get into a lease on May 1st and then count that expense into your you cannot submit it for this purpose. And then utility payments, again, contracts that were in place prior to that February 15th. And for you independent contractors, it has to be something that was shown on your Schedule C in previous years. So with those non-payroll costs, the SBA was actually pretty flexible and generous on this. You can, it could be a cost that was either incurred or paid during your covered period. So let's say you got your funds on May 1st. You received your utility bill for April on May 5th. You can include that utility bill even though that expense wasn't incurred during your covered period, but you are paying it. And then on the back end, you can, if you have not received a bill yet for your utility, yet you are, it's during your covered period, you can have that incurred expense included. So like I said, that was pretty generous of the SBA to put in there.
Yeah, we've seen clients who were struggling with paying rent. And then when they got their loan proceeds, were able to catch up on a couple months back rent. And
Yes.
that could be included, again, as long as it doesn't exceed 40% of your loan amount.
Right, that's a great example. So if you had to pay a couple of months in the rears, that's included, but you can see that one bullet point on the bottom there is you can't prepay
Right.
rent and then include it. So as I mentioned, there is 2 different applications available to process. The first one, and it's right in the name, is the easy form. So this one does not have any schedules or worksheets that you need to include with it. And basically you're going to use this form if you are that owner employee category, so self-employed, independent contractor, sole proprietor. You are also going to use this form if you had did not let go of any headcount and did not reduce any wages. So you're going to attest, nope, everybody's still here and we are paying them exactly as we did as of February 15th. There's a third one here, and I kind of put some red caution tape every time I talk about it, is you did not reduce salary and wages, and however, you cannot operate at full capacity because of government mandates. There is no guidance on this as of yet, and there's no clarity. So I would be very, very careful checking this box. And if you want to, I would just hold off and wait until there's more information available. Obviously, you have time. So yeah, use that time. And you can see there's a picture of the application. Really, this is a 1 page that you only need to put input details. The rest is just signing and initialing to attestation. Yeah.
You still have to provide supporting documentation on the EZ form, Courtney?
Yes, absolutely. So you will still have to provide a statement from your payroll provider or your 940, however you want to, and I've got a list of documents coming up. But yes, you still need the supporting documentation.
And if you're working with an outside payroll provider, many of them have developed forms specifically for you to use to attach with the application to make it simpler.
Right. So on the actual full application form, this is where if you've had to reduce headcount or wages, you're going to use this, and this requires what they're calling a Schedule A. And as Arlene just said, if you're working with a payroll provider, a lot of them have developed a Schedule A for you. So that's just something that you can attach. The worksheet itself has the actual Schedule A that you could complete by hand. Our portal at the bank is going to have it fillable online, so you can create a Schedule A, or you can just attach it as another backup attachment. And then you have the worksheet, which basically is all the detailed information for your Schedule A. Oops, sorry about that. So what is the basic calculation here? Let's assume that you used 60%, at least 60% on payroll costs. What you're going to do is you're going to add up that payroll cost, and then you're going to add up your non-payroll costs. And then step 2 is you are going to reduce it by the number of, the amount of salary. That's a dollar for dollar reduction. And then if you had to reduce headcount, you're going to reduce it by the percentage of headcount that you had. And I have some examples that we'll go through. And then that's the amount that's forgiven. So it might be a little bit clearer with some numbers behind it. So here's the example that I put together. Let's say you received a $200,000 PPP loan. You have 15 employees. You didn't reduce headcount and you didn't reduce salary. You used $188,000 on payroll and $12,000 on non-payroll. So the first step is, yes, I cleared that 60% rule for payroll. And so that's your first step. Your second step is, did you reduce wages? Nope, didn't reduce wages. I'm good there. Did you reduce headcount? Nope, I'm good there. So everything is $200,000. The loan is fully forgiven. Hooray. So let's say you didn't have enough payroll costs and you didn't quite hit that 60% marker. And you only used 110 on payroll and 90 on non-payroll. You still spent $200,000. However, you only spent 110 on payroll costs. So what you're going to do is you're going to take that 110 divided by your 60%, and that gets you to the $183,000, which means you will be left with a loan of $16,666.66. That would be payable to the bank. Now let's go back and say you spent enough on payroll, you cleared that hurdle, but you needed to reduce wages. So in this example, you had to reduce wages by $5,000. So you've got your $200,000 loan, you reduce it by $5,000, and then you don't have a factor for headcount. In this case, $195,000 would be forgivable and you would be left with a $5,000 loan. Now let's say you kept wages in place, but reduced your headcount. So you had 15 employees at the beginning of this and you had to go, oh wait, oh, I didn't change. Here, hold on, where'd it go? Huh, that's interesting. Okay, sorry about that.
Yeah.
Yeah, I duplicated the slide. Not sure what happened there. But let's walk through that. So you've got, let's say you kept your wages in place, but you had to reduce your head count by 20%. So that's 2 of your employees. So what you're going to do is you're going to take that 200,000 and times it by 80% to give you 160,000 that would be forgivable. And Ginny, what I will do is I'll update this slide. I don't know how it fell off, but I'll update it so you have it and can circulate it. So
Great.
Why I like to show these 2 examples side by side is, let's say you're in the middle of your covered period and you have a hard decision to make. You either need to reduce your headcount or reduce your wages to keep going. You can actually crunch these numbers prior to making your decision to see which one would be more lucrative for your business and which one would allow you more forgivability. So that's why I always like to say, you have the time for forgiveness, crunch the numbers, go, work with your accountant, work with your bankers, and make sure that whatever business decision you need to make is a smart decision when it comes to the forgivability of this loan.
Right, because I'm hearing many clients who are, fearing laying off employees because they don't want to lose the loan dollars. But if they went through the exercise that Courtney just showed, the amount of loan that they would have at 1%, may make much more economic sense than the amount of payroll they're holding on to just to keep their FTE.
Yep, absolutely. So the documentation requirements, basically the SBA is being very flexible here. As a banker, that it gets a little confusing because when we're underwriting a loan, we always want an audit or review, but we'll take tax returns and maybe that QuickBooks statement. So that's kind of what's coming into play here is, while we would prefer the tax filings that you're doing or something from a third-party payroll provider, we can and will accept copies of your statements, copies of a canceled check, receipts to prove up that payroll coverage. For the non-payroll expenses, you're basically going to give us your billing. So your utility bills, a copy of your rent payment or the check that cleared. If you want to provide a copy of the lease, that's also acceptable. And then for the mortgage interest, a copy of your monthly mortgage billing.
Mm-hmm.
So again, things to consider, and we've kind of already touched on a lot of these. Take the time, crunch the numbers, have the conversation with your financial experts on which option is the best for you, 8 weeks, 24 weeks. And what's, if you don't rehire everybody, or if you don't put salary and wages back to where they were, what is that going to look like for you? And as Arlene said, is it the best business decision actually to have a 1% loan? Some individuals, and I completely understand it, they want to get this over with. So even though you do have the time, if you are a company or an individual that has fully spent and overspent for an 8-week covered period and you just want to just move on with life, I totally get that, because again, in the 24-week period, even if you apply early, you're still attesting to the fact that you are retaining headcount and wages. I'm going to let the ladies take this slide.
Well, and what Courtney had mentioned this earlier. So the expenses that you're incurring that are considered the allowable expenses to get your loan forgiven, they're excluded from gross income. They make this very confusing. So as you can see in the first bullet, it's excluded from gross income. So if you have a $200,000 loan, that loan doesn't become taxable, but just the reverse, the expenses you incur to have the loan forgiven are not tax deductible. So, if you have a year where you may have broke even and, zero profit, zero loss, and you had a loan forgiven of $200,000, you will now have $200,000 of taxable income because those expenses won't be allowable to be deducted. So that's something we just want to caution you, so that when you're doing tax planning at the end of the year and working with your accountant, you're not surprised by a larger tax bill than you might expect during a year when you're saying, my business was down, how could I now owe taxes? I think that covers that slide.
Okay, great. And Michael, we're at the questions slide. So if there's any questions out there that you want to read off to us, we'll be happy to answer to the best of our abilities.
So anyone, if you do have a question, you can type it in the comment section, or I know there's a way to kind of virtually raise your hand, or if there's a lull in the audio, you can just speak up. We have one in the comments so far from Claudia at Northern Illinois Justice for Our Neighbors. And she asked, we have a full-time employee who will be going to law school at the end of August and has asked for their time to be reduced to part-time, 20 hours. Will this affect our forgiveness?
I would say that's something that they're voluntarily doing. You're not imposing on them, so it would not impact your forgiveness. Do you ladies agree?
I agree. Just make sure it's fully documented. Have her send an email or, have a letter on file to that effect that, it's showing that it's her decision, and she's the one requesting it.
Sure. And so if I may ask a follow-up, so when we submit our paperwork for the forgiveness, we're submitting that documentation as well.
Correct.
Okay. Thank you.
That surely cannot be the only question you have,
I
everyone.
think another one just popped up.
There's another one.
What is the term of the attestation that we are signing to keep full-time employees following the 8 or 24-week period?
So this comes into play if you have chosen the 24-week period and you apply prior to the 24 weeks being up. So let's say you have maximized and have proof for full forgiveness at 18 weeks and you want to get moving on that. What you're attesting to is that you are retaining for the full 24 weeks.
There are numerous attestations you're doing as part of it.
Yeah.
Mhm.
So I would really recommend that you really read through it. One of the attestations is if you are an owner employee, but your salary was say less than 100,000, you can't have more an allowable salary for the loan than you took in 2019. So, that's another attestation. If you had a bad year in 2019 as an owner and you didn't take any payroll and now you've got loan proceeds, so you're like, oh, I'm going to pay myself this year.
Mhm.
Even though Courtney clearly listed what the caps were on that, the cap is the lesser of that number or what you took in salary during the previous year, prorated by, 24 over 52, 24 weeks over a 52 a year period. So read the application.
Does the 8-week period also have an attestation to keep employees beyond 8 weeks?
No, so if you're applying for 8 weeks, you only needed to retain during the 8-week cover period, and you would only need to prove that. So I unfortunately have some of my nonprofit clients that were able to fully utilize during the 8-week period, and they're going to close it up at 8 weeks because now that this has gone on way longer than any of us wish it would, they're going to need to start furloughing employees just to stay afloat. So if you are taking the 8-week, then you are only attesting to the 8-week. If you're taking 24 but you apply early, you're attesting to 24.
Right. There is a little lack of clarity because I also read just recently, and I can't point my finger onto where, that there currently are no rules that require borrowers to maintain their FTE after they have filed for their loan forgiveness, but before the end of their cover period. So it is possible that if you file after 16 weeks, then on the 17th week you let somebody go, that might be okay. And again, I wish we could give more certainty because obviously uncertainty is uncomfortable, but the rules still aren't clear.
Right.
We have another question that asks, if the past PPP loan was not enough to cover expenses, can you apply again?
Nope. It's a one and done. I have heard, and Secretary Mnuchin did testify that they are considering another round of funding. However, there is absolutely no details or information on this. So at this point, and I have a feeling they kind of want to try and get through this round of PPP and forgiveness before they try and put out an additional program. So at this point, no, you cannot apply for additional funds.
The other thing, though, you might want to consider would be the EIDL loan, if because the EIDL does offer the advance. Now that would reduce your forgiveness amount, but it's also, the up to $10,000 max is kind of a free and clear sort of thing. And there's some favorability if you look at the EIDL loan should the loan go through. So, because it could apply to other things, not just these specific covered costs that the PPP loan states. So it's another possibility if liquidity is a problem.
Yeah, I also have seen emails, and I think they're in the chamber emails. Lake County has a grant program, correct?
Yes, Lake County Forward does have a grant program, and that is, I think they're accepting applications through July 20th, if I'm not mistaken. I can double check my emails. We'll be sending out another newsletter tomorrow morning, so we'll include that again. But I think the application period is through the 20th.
Right, in addition to the grant portion of the EIDL loan, I mean, you can also apply for an EIDL loan, which is at a low rate. It's what, 3.75%? What is it?
Yes.
Is it
3.75
And
in
2.75 for nonprofits.
Correct.
Oh, yeah.
and a
And the
very
pay-
long term.
Yeah, the
Mhm.
pay period back is very long, so could be very affordable for a business.
But it is a secured loan and it is non-forgivable. So keep that in mind. And if you have collateral pledged at one of your banks, you may want to let them know.
We have two more.
We would appreciate it, right, Courtney?
Exactly. We always like a heads up, and we don't like to find surprises in our
Right.
borrowing portfolio.
It will help you when you go for renewal at your bank, whether it's hers or mine.
We have time for these two more questions, I think, that are in the comments that are similar. Michael Drecky asks, it was mentioned that qualifying non-payroll costs are covered if incurred or paid during covered period. Is the same treatment applied to any payroll costs generally or state local taxes specifically?
So that was with when you can either use the covered period or the, what's it called? The
Alternate.
The alternative covered period.
Yeah. Sal, I don't know, Sally, you more comfortable talking about that? The alternative covered period? I don't want to put you on the spot.
No, that's okay. I mean, I think people are aware that this alternative cover period provides a little bit more flexibility in terms of covering payroll costs. So if you're a bi-weekly payroll, or even less of weekly, then you can treat your covered period as the start date of the first alternative covered payroll period. Am I kind of quoting that correctly?
Yeah.
And so that could help in terms of trying to qualify these incurred or paid payroll costs. And I know the other thing that kind of follows up is, for the end of that covered period, the alternate covered period, it's if you pay, you can pay through that covered period. If say it lapses at week 8, but then you have one more payroll to cover in that period. If it's paid before the next payroll period, it can fall into the covered costs. Am I quoting that correctly, Courtney?
Yeah, so basically in a nutshell, if you're on the 8-week, if you're using the 8-week period, it's possible to get 10 weeks of payroll if you're using the alternative cover period included.
Correct.
And then similarly, it says similar to the prior question, can union benefits incurred during the 8-week period but paid a few days after the 8-week period be included?
So if it's based on your normal pay period, so your normal cycle. So if your retirement contribution is always made 3 days after the pay period, and your pay period ends, say the end of your loan, if you pay it on that next pay time available, then that can be included. Same with your health insurance, but it can't be a prepayment for the next month.
So Barb,
Call from Roselle IL.
our union benefits are typically paid on the 15th of the month. The portion that is associated with pension and healthcare coverage would be something that we incurred but had not paid if our coverage period ended on like the 11th of the month. Would that be something that we could include in our calculation?
Arlene, and that.
Okay, sorry, could you say that again? I was trying to turn my house phone off.
Sure, sure. So typically we pay our union benefits on or around the 15th of each month.
And
Our,
are you paying, I'm sorry to interrupt, but are you paying it for
The covered period.
during the covered period, or are you prepaying for are you paying for the forthcoming month?
no, we're paying in arrears.
Okay,
And so it's like 4 days after our covered period ended is when we were able to get the calculation and pay those benefits.
and I think those would be
I-
included.
Because they're incurred during that
Yeah,
covered period.
right.
Okay, very good. Thank you.
The other thing I wanted to bring up too is that the SBA has indicated that it is going to separately issue another interim final rule addressing how borrowers can appeal if you get an unfavorable decision from the SBA and you don't agree. So there's still more guidance going to be coming on that, as well as, I'm sure, clarity on some of the other things that we listed that lack clarity.
Maybe that'll come out when they tell us where to send these things.
There's one other thing I think I wanted to point out is just that, you know, I don't know if everybody's heard about the disclosure, how the SBA is going to be disclosing the names of people who have received loans over 150,000. It'll include the name and addresses of your business will be disclosed by the SBA. Anybody who received less than 150 is just going to be demographic information. So zip code, location, approximate location of these loans, not the name, but just so you're aware that, you know, there may be some disclosure.
It is, it's out there now.
It's
Yep.
already out,
Yeah.
and the media is having a field day with it.
Yeah,
So,
so it's public.
yep.
Well, I know we started a few minutes late. I do apologize for the technical difficulties, but I also want to be mindful of everyone's time. So Ginny or any of our panelists have some last comments they'd like to make? Or we had a question regarding if the PowerPoint deck will be available to participants. I believe we'll be able to share that, correct?
Yes.
Yeah, I will correct that one slide and get it over to Ginny, and we'll have it available for everyone. I don't
Perfect.
know how that fell off.
So
Yes.
this meeting is being recorded also, so the meeting and the PowerPoint presentation will be on our website on our business research page, probably later on today, so you can find it there.
And for more updates, you know, we always recommend that you continue to check every day or so on the SBA website to see if there's any other interim ruling changes that you need to be aware of. Other guidance, if I've had clients ask, how do I calculate the FTE? We keep hearing about FTE, but how do I
Yeah.
calculate it? If you walk through the application, where you have to disclose your FTE, there is a part of the application that can help you calculate your FTE as well. So I would suggest that as a tool.
Great. Well,
Okay,
thank you so much,
great.
ladies, for all of your continued help and information you provide.
Thank you very much to Courtney at First Bank of Highland Park and to Sally and Arlene at Wipfli for sharing your expertise. We really appreciate it, and thank you to everyone on the call. For going forward, as I mentioned, our next is a series of marketing on video platforms, digital marketing. And if you have any specific topics that you think we also should address, please email me or Michael, and we will find you an expert. Thank you, everybody.
Bye-bye.
Thank you.
Bye-bye.
Bye.